Welcome back to Fast Market here on the TD Ameritrade Network. Now let's go to our next guest for our cash tag segment, and that's going to be Megan Brantley, Vice President of Research at LikeFolio. Happy Friday, Megan, and welcome back.
Happy Friday, guys.
All right, so we're talking cruise lines. Royal Caribbean got a price target hike today, initiated at one of the firms with a buy on this one. Are you guys seeing data backing up the 30% rally that we've seen so far this year? It seems like people are still traveling, but what kind of data are you seeing?
Yeah, so I'll start with the bright spots first. So whenever we look at booking and cruise mentions just across the board, we see that they had a really strong, what we call wave season. And so this is from January through the end of March. And it's really when consumers tip their hands and when they're actually making these bookings to take cruises later. And you can see that in winter of 2022. That's where this shows up on the bar on this chart right here. And those mentions were significantly higher year over year. Those are 47% higher than they were last year. And, you know, we did see indications from a lot of cruise lines saying this was a really nice resurgence in consumer demand. And now, whenever we look at spring 2023, which this includes the month of March and where the month of April so far, and we do still see growth. It's up about 6% year over year, but that's a serious slowdown versus this booking season. And so I think that we're starting to see some signs of weakness just in forward-looking demand. Whenever we look at all, the cruise lines competitively versus each other, we do like where Royal Caribbean is positioned because it's kind of in the sweet spot. It's got a higher price point than Carnival Cruise Lines, but it's got a lower price point than Norwegian Cruise Lines. And so it kind of benefits from, that higher clientele, but also could benefit from the trade down effect of, consumers who are looking for a high quality cruise, but maybe aren't going to splurge for Norwegian. However, when we look at this, Royal Caribbean demand data, we do see signs of slowdown in the current quarter. So we see signs of strong bookings in the quarter that they capped off, the first quarter. But in Q2, we see serious slowdowns. And this is kind of in line with just overall booking trends. Now, while booking trends are seasonal in nature, we would expect them to be much higher during that peak season. It is a little bit concerning to see that year-over-year weakness. And so this is one where we've kind of got our eyes on guidance for Royal Caribbean, especially ahead of its next report.
Megan, the comments from the cruise line CEOs and CFOs has all been really positive. The charts on these stocks hint at a recovery, not a straight line, not smooth, never going to be smooth. No stock, no recovery ever is. But some of the comments out of Royal Caribbean finished 22 on a high note, entering 2023 with full strength of our operating and commercial platforms. This is, for all the businesses out there in the world, the one thing that you gotta have to be successful is demand for your product. And Tom and I report on a daily, weekly, monthly basis how the one thing that's remained constant is demand for travel. And cruise lines are part of that travel. Kevin Hinks just booked a cruise for the summer of 2023. So there's demand for these parts of travel out there. And cruise lines are polarizing companies. You either love cruises or you don't. And so I understand that demand waiver, but it looks like, Megan, the trend, though lumpy and bumpy and not smooth, is still positive here, Megan.
Yeah, it is. Overall mentions of booking a cruise, certainly, especially for that core booking season, that wave season, were really strong. We did have that data basically off the charts. Anytime you hear us talking about like a 47% year-over-year increase, especially for something like a polarizing cruise, that's pretty significant. But we are seeing a shift in that data. We're not necessarily seeing it stretch out into, especially the month of April and even the end of March. We're starting to see some signs of weakness. So this is what really impacts our data, especially ahead of an earnings event, just to make us question to say, okay, yes, we think that Royal Caribbean, for example, is going to report a really nice quarter. However, we're a little worried about what their guidance indications may be because we're not recording that blockbuster demand like we were. just on a macro level, I can say that cruises do look to be performing other types of travel. When we look at just mentions of taking a trip or mentions of booking a flight, we're seeing some actual year-over-year weakness starting to emerge, and we still have booking a cruise as a positive growth driver. So I think that that's one thing that cruises definitely have going for them, a ton of pent-up demand and consumers who are ready to get out there and have a nice vacation. But we are starting to see some signs of a slowdown. So just something on our radar to watch moving forward that will definitely be keyed into the forward-looking guidance, because any signs of uncertainty or signs of weakness that this may have been just a flash in the pan, pent-up demand type of a recovery deal could be alarming.
And Megan, I know you guys track happiness quite a bit as far as your data goes. This is basically, three companies fighting for the same thing between Carnival, Royal Caribbean, and Norwegian, which we're going to talk about in a little bit. I mean, where does RCL stand up in that mix of happiness going into this earnings report? And do you have a score for us?
Yeah, so RCL is actually doing really well in regard to happiness, 81% positive, which is really high in our universe. A lot of times when we talk about travel experiences, anything above 80 is really, really significant. And it's actually improved by about 3 points year over year. So long term, we do think, if we had to put our chips on one of these cruise lines, we really like where Royal Caribbean is positioned because of its higher price point. Its consumers might be more insulated from some economic macro pressures, and we like that happiness is improving. However, we have a little bit of an asterisk on guidance, and that's really what's dragging our score down overall heading into earnings. We're at about a -30 right now. So for us, that's bearish. That's not necessarily extremely bearish, but it's definitely on the bearish side, and a lot of that has to do with that demand guidance. We're still expecting a strong quarter out of Royal Caribbean.
All right, great data, great info as usual, Megan. Appreciate it, and have a great weekend.
Thanks, guys. You too.
All right, that's Megan Brantley, Vice President of Research at LikeFolio, breaking